Hello traders, welcome to another daily analysis. Today is November 16th, right now it's just past 6 p.m. Eastern Standard Time. So basically the market today, the headline and everything else, the sentiment is still the same and basically has been the same ever since the US election. We are still having a very strong strength into US dollar, and it's still generally a quite risk-on sentiment in terms of news and public speakings from the Federal Reserve members and from people in the global market. However, you have to understand we have been this strong strength into US dollar. It's been quite a few days already, so don't be surprised to see some pullback. In fact, I'm gonna pull some chart later on. You're gonna see we already have a beginning of some pullback, but in terms of fundamental strength, US dollar is still by far the strongest currency and will most likely be like this well into 2017. So today we had the GBP, British Pound Average Earning Index, and climate account change. Now, I actually took this trade as an intraday trade. But first of all, because the climate account change actually came out as very negative deviations. Now, however, the unemployment rate was also a decline, which is actually a good thing. Now, I understand you have to sometimes, I personally sometimes get confused when I first start trading fundamentals, because employment rate, you want it to go high. Unemployment rate, you want it to go low. Now, of course, it's very simple, but when you're looking at the arrows or when you're trading live, sometimes you get confused, right? Because you basically are accustomed to looking at a larger number, meaning positive data. But when you're looking at unemployment rate, sort of like an opposite data, opposite effect. So you just have to take that in mind. I got confused for quite some time so when I first started trading fundamental. So the unemployment rate was actually a positive number, which is better than previous. But I didn't know it was such a big impact until I got into a trade, and I didn't see the trade work out very well. So I just quickly glanced the news and to realize the unemployment rate was a small decline, which is a good thing, but it actually is the low since 11 years. So there was actually a very positive data now looking at the article. So I soon just got out my trade, took a small loss, and that's the thing about trading fundamental. Unless you are very good at it and you keep tracking at all the fundamental data from all the major countries. Otherwise, every time get accustomed to read article, get accustomed to read news and information on time in the spot, because sometimes you don't know, sometimes a piece of data you don't think is important. Well, for expert who has been tracking that currency, actually will provide you with a lot of insight. So I got out because of that article, and lo and behold, it actually went against me way more. So I actually got out as a good decision, but I'm gonna go over that more. And later in NY session, we had the Canadian manufacturer sales come out as positive number, while the US producer price index data and core PPI were both a miss, especially the core PPI data was actually a negative deviation. Crude oil inventory today was built up, but not as large as last time, so it's quite a neutral event. Now later on, Asian session, we will have employment data from Australia. Now, sentimentally, WTI had a red today, which is a small down day, same as the equity market. So as I mentioned, although we have been having these risk on sentiment days for quite a few days ever since the post-US election, but now we should have some pullback, and this could very much be the beginning of a pullback since it's about right timing as well. Now, Federal Reserve member Bullard almost confirmed the rate hike in December, saying that unless there's a surprise event, otherwise, it's more certain that Federal Reserve will hike and have to hike the rate, which of course is a very positive news for US dollar. Now, another news is that the EU officials said that Brexit talks will actually take longer than 2 years. So yesterday we're saying that the leaked document from the parliament saying they didn't have a plan for Brexit. Now the High Court has the ruling that the Brexit has to go through the parliament. And the EU official already also confirmed that the Brexit talks will take a lot longer than 2 years. That means that the Brexit might not happen. I guess this is very interesting to see that even though they passed this referendum, but now the thing is that the Brexit might not happen. Means that they might just stay as it is for as long as they want. And that will actually provide, I know it's still unstable, still uncertain, but at least it will become more moderate, more mild, and that will become actually provide some good certainty into a British pound. Of course, this is a quite positive news for British pound because, now at least investors and people can take a breath and then just let the thing play out. On top of that, according to other news I read, Google actually contract to invest more into London, so they actually buying few new buildings to invest. And ever since the Brexit, a lot of big corporations already expressed their interest to invest heavily in Britain. Of course, they taking advantage of the low currency rate. But just saying that London or Britain, it still has a global status in terms of this financial hub. So now looking at the policy, the policy is really what deciding the future of the country and also the stableness of its currency. And now looking at it really signal a lot of possibility that the Brexit might not actually happening for 2017 or maybe until 2018. But we'll still take a look at that. I'm still fundamentally bearish just because you always have this ticking bomb right there. So for me, it's still not a good currency to hold long term. But as for now, really, you have to let the market decide where they want it to go. So we'll take a look at the chart and let the price actually decide where it wants to go, because fundamentally, we don't really have enough direction for now. Okay, let's take a look at our current trade first. First of all, our daily Aussie newsy trade. No surprise, as I say yesterday, we should have a pullback today, and today we'll have a big red candle, just right below 200-day EMA. Now, of course, this is a bearish sign, and if it's a price action alone, I definitely don't want to hold it. But for me, the only reason I'm holding is because Australian dollar is really perhaps the second strongest currency right now, just right after US dollar. And yesterday, the reason of this big drop there is because the commodity price has been up for quite a few days. And as I mentioned, it's first of all because the actual manufacture production from China and all the developing country. But second of all is because the speculator has got into this market largely to speculate the commodity price up. And that's what caused the commodity price to go even higher. So what happened to this red day today is because the Chinese government has came out last night saying that they are thinking to implement new measure to curb this speculation activity. So in China right now, they have this very big problem, which is hot money. There's so many hot money that trying to speculate it. They already having a property bubble. And now there is, so whenever right now for Chinese investors, whenever there's opportunity, they're going to pour the money in altogether. You just imagine there's so much money in China, so much money in the Chinese investor. Now, of course, the government, what they can do is to try to stop this movement before it become a bubble. So what they're trying to do is to try to implement new measures to stop commodity price speculation. And that, of course, is a negative news for commodity price. And that, of course, push pressure the Australian dollar, and that's why we have this red day today. Now, of course, don't be surprised. China is still a communist country. What does that mean is that if they say they're going to implement any measure, they are capable to implement right away. They don't need any parliament to go over the lawmakers, so they can really. So that's a good thing about them, is like their policy is very efficient. There's basically no barrier or no voting process. They can just implement any regulation they like, just like that. And that's why whenever you see this kind of news, don't be surprised to see a very quick reaction. That's because the country, if you see anything like this in US, or in Britain, any Western country, it might be disregarded because it's like Brexit. The Prime Minister say, I'm going to have a Brexit talk, make sure we trigger the article in May 2017. That's what she said. But what the market reaction is that, hey, it's not your say. You have to go through the parliament. and then they have to go through the court, and now it turns out it's not in favor for her statement. So now people kind of disregard her statement. So that's really the limited power you have as a Western country leader. Now, in terms of China, it's a completely different story. So if they say they're going to curb the market, if they say they're going to implement certain regulation, they are capable to do it next day or even next minute. So just to understand, that's why you have to keep track of the policy of the country's political systems to understand how central bank's decision or government decision can affect the overall market, because they actually have different limited of power. So I am going to hold it for sure, because like I say, I have no reason to get out. The only risk I have, of course, is this short-term noises. I don't know how far this pullback will be. We might very much get stopped out. That's the first thing, which I'm fine about it. Second thing is because the New Zealand dollar, as I mentioned, after the earthquake, they should have an infrastructure spending budget very soon, and that's going to be a boost for the New Zealand dollar. So that's two risks that's on my plate, and that's why I'm already in break even already. So I'm going to hold it, and really the best scenario is I don't think it will keep going right away, but the best scenario is for it to go sideways and then keep going. It might give me another bullish signal, which I can actually add on. But until then, I can just hold it and hope we can see some sideways or maybe a bullish signal to keep going. The worst case scenario is we get stop out at break even. My other trade is the cable. Now, as I mentioned, I got into this trade at the news event, and now I'm still holding it. Of course, just by looking at that, it's not really a strong downtrend. It's not really a strong uptrend. In fact, it probably looking more into the upside than downside, since we are still in this short-term uptrend. Now, where is this thing going to go? News-wise and fundamental data-wise are all very positive for British pound. The only thing I'm holding is, again, two things, because it's against US dollar, and I'm still very bullish toward US dollar. That's why it's gave me confidence to keep holding this trade. But I don't really have enough, as much as confidence, to short British pound in terms of fundamental data. The only reason I am bearish about toward British pound, of course, it's the long-term future, but also if you're looking at the futures market, there's a lot of short selling into British pound. So generally speaking, the market is still bearish. People are still looking for opportunity to sell British pound, but as for now, it might not be a good timing to enter. So for me, I'm just holding it and let it play out. That's pretty much my strategy for this trade. But I'll take a look. If prior to the weekend I still don't have anything happen, I might adjust my stop loss or maybe just get out altogether. So let's take a look at our 28 pairs today. So Euro. First, Euro Pound, of course, again, another neutral. Today is very thin liquidity, to be honest. Especially we have such a negative deviation for British pound, but the market is just really, really thin. Euro Swiss, again, very indecisive. Even Euro dollar is a quite small movement compared with other days. Euro Aussie actually have an update for Australian dollar versus Euro dollar. Euro CAD, it's continuation of down day. Euro New Zealand, it's really indecisive. And Euro Yen have a small pullback. Again, nothing really much to talk about here. Right now, in terms of Eurozone, as mentioned, next month, you have the Italian referendum. And then, of course, now people are actually, if you look at the news right now, the French presidential election is actually start getting to the headline, because they're coming up next year, and that's where they start their campaign right now. Same as the German election, it's going up next year. We still don't know if Angela Merkel is going to come out to campaign again, but most likely she will, and then it will be very interesting, because if she re-elected, that's a very good strength. because of the faith into the European nation. If she does not get re-elected, that's a very, very bearish sign for euro dollar. But we have to see that until next year. As for now, euro is of course neutral to bearish stance. Look at cable, as I just mentioned. Really, the indecisive movement. I don't really have anything right now. Cable cat, pound cat, and let's take a look. Actually, pound cat is not a bad uptrend. If you just look at that, it's actually a very interesting uptrend. You have this, decreasing down movement. Of course, we are betting on the negativity of Canadian dollar, which might change anytime if by the end of this month OPEC has reached an agreement. Pound New Zealand, pound yen. Again, pound yen has a small bearish signal for whoever wants to do technically. Again, you are actually doomed for a pullback anyway. So if tomorrow or today, if it is a risk of sentiment, then you will actually see some pullback from pound yen, which is a very good trade. Of course, I'm not going to enter anything because I'm already had a British pound daily trade, but I might go into intraday trade today just to short pound yen because I like what I see. Swiss yen, again, we are at this 200-day moving average. Dollar Swiss is indecisive day, and look at getting to Asian session, we start having this down day. So as I mentioned, you don't be surprised to see some pullback in US dollar, and because of the dollar has been going up for so many days. So yeah, don't be surprised to see some pullback. It's going to happen. Aussie Swiss, Aussie dollar, and Aussie cat. No, people might say, am I looking to short Aussie dollar? Well, not really, just because first of all, it's a breakout signal, not really what I like to do most. But second of all, because I don't want to short Australian dollar, as there's really no reason to short this currency in terms of long-term play. It's still very strong on my play, so I'm not really looking to short something that's fundamentally strong in a longer time frame. Again, Aussie New Zealand, as mentioned, we are doomed for pullback, and hopefully we can hang on to this. Aussie yen, again, another pullback for Australian dollar. And CAD Swiss. CAD Swiss is actually a very good bearish signal. Now, am I going to short it? I'm very tempting, but not really, because I remember I just read a piece of news that the Swiss franc is very ready. SNB is ready anytime to intervene. That means I don't want to buy Swiss franc at this moment. Canadian dollar, although bearish, but still has the oil market to support it. So basically, I don't have a clear direction. I just have a price action telling me that we might have some pullback. That alone is not strong enough for me to enter a daily trade. CAD yen, same thing as this, a very a pullback bearish signal, but not strong enough for me to short it down by. Actually, for yen, I might consider it because we are due to a strong pullback, and oil market is still looking bearish. So if today is a risk of sentiment day, along with a pullback, we might give us some. It might actually pull back at least as low as here. That's what we are hoping. So I might consider it, but I will take a look more later on. New Zealand Swiss, again, very indecisive. New Zealand dollar. New Zealand dollar, again, a small update, and actually not a bad signal to long. Of course, if that's the case, you have to short US dollar, but I just don't want to short US dollar at all, at this moment. New Zealand CAD and New Zealand yen. So really, the only thing I'm maybe looking at is CAD yen. And the reason is because, first of all, we have been up for this strong risk on sentiment for many days. So I'm really looking forward for a pullback. That's the first thing. Second thing is that if you're looking at the Canadian dollar itself, the oil market itself is really not in a good spot. So really it's all depending on what happened to the OPEC and what are they talk right now. But basically what I'm saying is that don't be surprised to see a little bit pullback from these candlesticks. But whether that's good enough for me to short into this pullback, I really don't know, to be honest with you. But I think I will do it just because it provides me with good risk and reward. But I might tighten my stop loss very, very quickly. So today, let me take a look to see if there is any Canadian dollar risk events ahead of me, because that's gonna play a big differences. So Thursday today we don't have any Canadian dollar data except the BOC review, and then going to Friday we do have a core CPI and CPI data. So this might be a problem, but it's in Friday, so I still have about 36 hours to go. We're expecting a positive number, so I don't know whether I'm going to enter or not. I might, since the risk reward is good, but I will do more analysis later on. Today I took a dollar yen trade, and first of all I took which trade I took? Just give me 1 second. Pound yen. Dollar yen. Okay, so today I actually took, first of all I took a Euro Aussie trade. Now, of course, it's a pure session play. I actually shorted and got stop out. Now, the reason is because I was looking at this as a sentiment play. I know that the Australian dollar has a strong sentiment. It's a risk on market. Euro dollar is bearish. So I actually got in at around this red candle and hoping just to ride the sentiment. But it actually goes against me. Again, it's because the piece of news coming out from China of the government curbing the commodity speculation. And that's really unpredictable, to be honest. So, got stop out. Really, there's nothing I can do. It is what it is. You have some loss some day, you have to win some days. And that's the thing. When you're doing a sentiment trade, I always put the least amount of risk capital. It's just because sentiment is very low probability trade. You don't know what's going to happen. You don't really have anything to say. You don't have any fundamental data to back you or any technical entry to back you up. So really, that's why a sentiment play, I always play lowest amount of risk capital. I got into dollar yen trade for news events because the PPI core PPI data from US dollar was a negative deviation. I got in at 109.33.32, but again it's actually stalled and didn't go anywhere. So after holding about 45-30 minutes, I just decided to get out because I don't want to get into the Wall Street opening, which we might have a strong buying into US dollar again. And here we go at the Wall Street 10 o'clock, 9 o'clock, we have another strong buying. Although it actually goes down at the end of the day, but for me to trade risk event, I really want everything to wrap up within 30 minutes. So it's a large risk capital, very short amount of time. You are just trading the momentum. That means if there is no momentum, then get out. Don't stay in the trade to make it become a sentiment trade. No, you are trading the risk events because of the momentum. So if you don't have a strong momentum right after the risk events, then you might as well just get out. So I got out at 109.27. Just making 5 pips, nothing much, pretty much break even. And the other thing I took is a cable Aussie trade, a pound Aussie trade. So I took this trade again because of the news read, the large climate change in British pound was very negative deviation. I got in only to realize the unemployment rate, although it's 1% decline, was actually the lowest since 11 years. So that was something I did not know. Once I got into that information, I decided it's too positive for this thing to keep going down. So I got out and it was a very right decision because soon after I got out at break even. Soon after I got out, it actually went up to another, 50, 70 pips, which it would have stopped me out. So basically, I saved myself from a losing trade, which for me, that's actually considered a very good decision, a very good winning trade. So basically, let's say today I'm still at break even, really nothing excited too much to say, And tomorrow we have few risk events, of course. Retail sale is really not a big event. Again, you can trade upon deviation, but really, I'm not really looking to aim for 50 pips as my usual profit. In this kind of event, I'm probably going for 10 or 15 pips, really just scalping it. So it's really up to you whether you want to take that risk. And then you have another US data coming out. Now we are assumed today's market will be a risk of sentiment. So if this data come out to be negative, that's going to help us. If come out to be positive, of course, you can buy it. So again, same thing, buy at positive deviation, sell at negative deviation. And then later on, you have the PPI data, which I don't trade anymore because it will be after London session. So let me give you the maximum and minimum number right now. So November 17, first of all, the retail sale, we are expecting to see 0.4%. We're also expecting to see core retail sale at 0.4%. And the maximum number is 1%. 1%. So if you see anything above 1%, that's positive. That's positive deviation. If you see anything below negative 0.1, so minus 0.1% is considered minimum deviation, which is negative enough for you to short British pound. In terms of US dollar data, the only thing we're looking at is really CPI and core CPI. So CPI month to month, we are expecting 0.4%. The maximum number is 0.5. So if you see anything above 0.5, you can long US dollar. The minimum is 0.2%. If you see anything below 0.2%, you can short US dollar. In terms of core CPI, if anything, just give me 1 second. I have core CPI year to year. I don't have core CPI month to month. Interesting. So CPI 0.4, CPI year to year 1.6, core CPI 2.2. I don't have a core CPI data here on my routers. So just give me 1 second. Let me see if I can find it. Core CPI, core CPI. Yeah, guys, I don't have a core CPI data. So I can only give you the CPI data there. So anyway, if you see anything that's a positive deviation, any of these numbers, feel free to long it. And of course, at 10 a.m. we have Fed Chair Yellen testify. The first talk, I believe, after the post-US election. So it might be an event or might not be an event. Very interesting to see. Other than that, really, the only thing, again, looking at this moment will be Cayenne trade. But again, I'm not really confident to short Canadian dollar versus Japanese yen. The only thing is because it's a good spot and I'm really looking forward for a risk of sentiment. So very speculative, but we'll see what happens. Okay, all right, guys. If you have any question, feel free to comment below. Otherwise, I'll be back tomorrow to give you another daily analysis. Thank you very much. Bye-bye.